if you're looking to start a new business or you have a new business, you trying to figure out what's the best place I can get business credit funding, I'm going to show you where I would start, and then I'll explain to you why I would start. All right. So the first card is Corpay. Okay. So if you don't have the best credit, Corpay, it is a charge card. Now, here's the thing about it. With this charge card, they are on a 21-day cycle. But here's the interesting thing about this here charge card. All right. 600 credit score. They pull Experian FICO 8. But again, just a 600 credit score. Now, I know some of you all like, well, my credit is less than that, and that's okay because I have other alternatives for you. But for somebody you all that are considering looking for a business credit card, it is a charge card. All right. Now, one of the things about it, it does report to Experian, Equifax Business, as well as Dun and Bradstreet. Okay. Now, again, the biggest challenge for most people when they get this card, they may get a low dollar amount. They may start you out with $500 or $1,000, right, on the charge account. But what most people fail to do is they don't use the card. So when you don't use the card, they cannot actually report any data. All right. So that's the reason I tell you, even if it's not the amount of money that you need right away, I would still use the card. Okay. Now, another thing that I would definitely tell people, when you're going after business credit funding, you need to evaluate actually how much money you're actually needing. Okay. You really need to evaluate that because most people, they really don't know. They're just guessing. So put a comment below if you're one of those people, you know you want to start a business or you got a business, but you really don't know how much money you need. All right. Just put a comment below. The second credit card I always tell people to get, when you have that 580 credit score or whatever, then you might want to look at this Capital One Spark card, okay, the Spark Classic. Now, again, the reason I tell people to go after this card is because even if you had a bad relationship with Capital One in the past and the account is charged off over a year, you still may qualify for this card. Now, the only thing about this here card is that it will report both on the business and personal side as well. Okay, but when you starting out business and you need some capital, and it is a unsecured revolving, and you can carry a balance on this card, so it's not a charge card. So that's the good part about this card. The thing about it, again, a lot of people don't think that they may qualify for this card, but I always tell people I would see if I qualified for this card. Now, the reason that I'm picking the certain accounts that I'm pointing out, because I tell people if you can't qualify for these accounts, these are the lowest hanging fruit when it comes to business credit. If you can't qualify for these type of accounts, then there's something else wrong with your file. Let's say you already started your freelance business, but you never structure yourself as a business. All right. So then you want to hop over to Giggle Finance because they offer you up to $5,000. And all they want to do, you need to show proof that you've been in a gig economy for at least 90 days. And your average revenue, monthly revenue is about, I said 12 to 1500. Sometimes they want at least 1500, okay, to be able to qualify. All right. Now, this has nothing to do with the credit, just so we can put that in perspective. And they said no credit requirement. So it's not about the credit. Now, here's the thing about it. If you do take the loan, then they will report your payments to TransUnion. But beyond that, they are not checking on the credit. Now, if you fall into one of these here gig economy bases, or you may just have a barbershop or a lawn care business or something, they're able to help you. What I'm trying to do with this video is actually show you guys some of the easiest low-hanging fruit to start getting funding. Again, most people don't know how much money they need, but if you start somewhere and then you can say, okay, this is what I actually need. All right. Now, the next one is Lyndesca. Now with Lyndesca, as you can see, They help you get funding. Now, they are a platform, but they help you get funding up to $20,000. Okay? Now, here's the thing about it with Lyndesca, over 25,000 annually. So you're still looking at what, about $2,050 or $2,150 or something like that. You're not looking at needing to make a whole lot of money in order to get qualified. And as you can see, that's with a 550 credit score. All right. So being able to show proof that you have revenue coming into the business, that's what they're actually focused on. So if you're able to show that, then they're willing to help you and be able to help. Then you have Fundo, and I've mentioned them a lot because they offer loans up to 10,000. Now, the unfortunate thing about many of these lenders, they may not support New York. Okay. Now with the credit cards, yeah, easy. But when it comes to these third party loans and stuff, and I think it's because of high regulations and the interest rates being so high. But at the same time, you're able to, besides California and New York, if you're a freelancer, a contractor, small business owner, or you're in the MLM space, then you will be able to qualify. And as you can see here, they're very detailed because they want to look at your bank account. So having a minimum of $1,500 in your bank account for at least 3 months. Now, let me clarify that $1,500. That doesn't mean you go and put $1,500 into your account and just leave it there. No, no. You actually have to show that you're getting regular deposits from your business in order to qualify. And again, it's not about the credit. All right, with this institution, it's all about you being able to produce regular revenue coming into the business. Now, here's NAV, okay? And you guys hear me talk about NAV a lot. But the reason that I continue to tell you all about NAV, because one, they give you 2 trade lines, right? So they give you 2 trade lines, one for the business monitoring service and one for the credit card. And going back to my original statement, what I was saying about Corpay, it also applies to NAV. Most people, they would get a $500 or $1,000 card, and it's a charge card, and they will not use it. And so when you do not use that card, it won't report. Another charge card you can take a look at is bill.com. Now, it's a charge card, but the interesting thing about it used to be Divvy. A lot of people talk about Divvy, and the thing about it is mostly anybody can get this card. It is a charge card. And the breakdown of this charge card, if you have, you can choose 1 week, you can choose bi-weekly, or you can choose monthly. All right. And so say that you choose to pay your bill monthly, then what ends up happening, they will give you less credit. Now, if you choose to pay weekly, they'll give you more credit. That's how bill.com or Divvy works. All right. And so again, when people get approved for this here type of charge card, and they do report to Dun & Bradstreet and Small Business Financial Exchange, but for a lot of people, again, they may get a low limit starting out. But the thing about it, they won't use the card. And so unless you're actually using the card, it won't be any good to get the data. You actually have to use the card. All right. So I hope that this video helps you guys, especially if you're starting out in business credit. If you have questions, you can click the link in the description. Schedule a one-on-one consultation. Thank you.